Good afternoon, good morning, and good evening. We are being joined by people from the United States, somewhere between 4 a.m. and 6 a.m. in the morning, the United Kingdom and Europe, anywhere in and around 10 a.m. to 11 a.m., South Africa, and as we move further and further east, Singapore, and eventually Australia. It's a very warm welcome. I'm really pleased to have the opportunity to address you today, and I really look forward to sharing some special insights that we have learned over the years. Please mute your mics. Please put your cameras on. I would love to make this a human event where I can see people, engage with people, see some friendly faces, see some warm faces, and make this anything but just another webinar, which can be incredibly frustrating. My name is Pavlo Phitidis. I'm a co-founder of Auric, an investor in businesses. I wrote a book or two, and I do some public speaking. Today is about you, and time is money. Today, we're going to talk about how to build a business from start to $50 million of annual revenues. In UK terms, 50 million pounds, 50 million euros. But as we move to South Africa, we're talking about a 500 million rand business. As we move to Singapore and Australia, around a $75 million Australian dollar or Singaporean dollar business. We're going to talk to the 5 impediments that get in the way, and then I'm opening the floor for some questions. Again, please meet and greet, actively use the chat. It's there for your communication. Introduce yourself, say where you're from, say what you're doing, say what you're getting up to, and I really look forward to a warm, engaging session with you. We're starting off with the question: what is the single most precious commodity in the world for all of us as business owners? What is it? It's one thing that we can never ever get back. Once we've had it, once we've consumed it, once we've spent it, it creeps up, it catches up, and it's called time. It's called time. Once spent, it's gone. Today, I'm going to be talking about how you invest time rather than spend time. So let's start. Let's start with a process over here where there is a structured system, a method, an organized methodology that can get you from where you are to a $50 million a year business, and then ensure that that business is successfully sold. This matters because 94.6% of businesses started fail to ever sell. They close at a tremendous cost to the business owner, their family, their employees, their customers, and their suppliers. I'm going to start by sharing an analogy with you. Building a business is no different to sailing a ship. If you think about it, every ship, when it leaves a port, has a destination. If the destination is not clear, you can't plan your journey to get to that destination. You can't plan the resources you need. You can't navigate the path to get there in the least risky manner possible and in the shortest time possible. In business, what is our destination? It matters. All businesses have a crew, and the crew is capacitated to sail. The crew sits above deck or below deck or in the deck, and every crew member knows what they should be doing, when they should be doing it, how they should be doing it, if they should be doing it, in order to make that journey safe, viable, and possible. Every ship has an engine room. It sits below decks, deep under the plinth line. And the purpose of that engine room is to turn the screws, to turn that propeller and give forward momentum to the ship, what we would call sales and revenues. And every ship has a bridge. It's up there at the top. And the function of the bridge is to serve coffee with an espresso machine to the captain of the ship, alongside navigating and directing the forward momentum created by the propellers. Building a business is no different to sailing a ship. And I'm going to use this analogy to share stories with you. But let's start. A quick poll. What is your destination? In terms of where you are today, what is the destination that you are aiming at? It could be a 3-year destination, a 5-year, a 15-year, a 20-year. Where are you going? We have a number of options available to us. Build, grow, and dominate your sector. Dominate your sector. You've got gas in the tank. You really want to build a significant business. Build, grow, and sell it. So selling it could be to a private buyer. It could be to a corporate entity that's looking to acquire your innovation. Build, grow, and close. Thankfully, no one has put any vote there. Build, grow, and hand over. Handovers are interesting. Handovers are very interesting because they occur extensively through the professional services sector, professional engineers, attorneys, lawyers, architects. In people-based businesses, handovers are very classically a way of succeeding to exit. The advertising and eventing agencies are extensive in that space. Build, grow, and IPO. Build, grow, and IPO. We need to think about IPOs and what they bring. They can certainly bring a lot of headaches, but they can certainly bring a tremendous amount of investment. IPOs invest into established businesses with established and confirmed growth momentum behind them. It's where you're looking for significant investments, but it's a fantastic way to also exit and harvest your years and years of risk. Fantastic. 80 out of 149. Why are you all so shy? We understand where we're going with this. Predominantly, build, grow, sell, followed by build, grow, dominate. I want to share a different view with you. The why of why you do what you do has 2 elements to it. It has passion, a belief in what I do, a love for what I do, a care for your customers and clients, wanting to make a difference. Passion is important, but passion without purpose is extremely risky. Purpose sits with us in a shareholder position. Why do you invest on the stock exchange? If you put $50 into a share, you're hoping over time the share will increase in its value. You're hoping over time the share will yield some dividends, and you're hoping to actually get a return on an asset. An asset has 3 features to it. The first thing is the capital growth. I buy the share for $50. 3 years from now, I sell it for $100. I have a $50 capital gain. The capital value of the share improved by $50. Hopefully, over the 3 years, the share yields a dividend of $10 a year. That's my income growth. But most importantly, at the end of the term, when I wanted to get out, I could get out because I could trade the share. In a business, we refer to that as a business being independent of you. All of us, in terms of our purpose, ought to be building what we, in Auric language, refer to as an asset of value. The business gives us meaning, it gives us purpose, it gives us passion, it gives us social engagement, it creates an impact. You feel that you're making a difference out there, but the business needs to also be built into an asset in order for you to harvest and reap the rewards of an asset. There are 5 elements to it. The first is the brand positioning. We're going to talk about all these elements in detail. If the business is you, it's a job. If the business is perceived to be a brand independent of you, then it's the early stage of an asset. The second thing is that a business needs to be operated by systems, because if you're not there, what governs the activities and processes in the business? Third element, a business, like a ship, needs an adept, able, and capable crew, motivated to operate the ship and absolutely set on getting to the destination. Finally, the business needs to have growth. Would you invest in an asset that doesn't have growth potential? Where will I get my capital growth from? Where will I get my income growth from? And finally, the business needs to be built in order to meet the requirements of an asset that's being acquired. So let's start on this process. There is a real system to building a business. It's not taught at university. It's certainly not taught at school. It's not really taught. If you think about all of us who have gone into business, 95% of us arrived there out of necessity, 5% arrived out of opportunity, but mostly the theory that we were told and taught didn't translate into much useful action for some period of time. But there is a method. There's a very particular process or methodology or a system that creates growth in the business. The first element is that you need to be special in the eyes of your customers. The second is that if you can then translate that experience that you promise your customers into a set of activities that create a system, you can rely on the system to constantly create that experience. Thirdly, without people, it's dead, it's inert. People give life to the business. They give life to the systems to deliver on your position and promise. Next, those elements, the system and people, release time. And as the owner of the business, the greatest shareholder, the biggest investor, your time needs to be focused on growing next level growth. Systems and team give organic growth. This time releases next level growth. And as you grow and you move into a different competitive domain, you have to innovate to hold on to the value you have. We'll talk through the system in more specific terms. But if we understand that there is a system to grow a business, the next question is, when do you do what you do? As the leader in the business, when do you switch gear? How do you adjust your focus? How do you determine your strategy? All businesses go through a business development life cycle. I'm going to talk about 4 cycles of growth to get to $50 million of revenue. The first cycle, which takes anywhere between 7 to 12 years and builds a business worth anything from $3 to $7, $8, $10 million a year, is about establishing your foundation. You're moving into an environment, you're intruding in competitors' environments, you're intruding on a customer's environment, and you're establishing a reason for being. You're establishing your business. You get your positioning right, you build the systems, you enable your team, you focus on growth, and then you have to innovate to stay ahead of where you are. See this as building your organic growth rate. See this as building the bone structure of the body of the business itself. There's a significant shift in leadership orientation over here. As a business owner, if you don't recognize that you have muted or transmuted beyond organic growth, and you continue doing the same things that you always have, you will mostly stay in this environment. There's a reason that so many businesses, 15, 20, 30 years of age, still sit in and around the $5 million a year revenue mark. If you recognize the switch, what we would refer to as getting to the next level of growth, at this point over here, you're building off the foundation in the previous phase, and this is about dominating your segment. It's about massively increasing your marketing and selling capabilities. It's about surging ahead and dominating a segment. The trick here, though, is what is a segment? And I'll share that with you a little later. Thereafter, you move to the third cycle of growth, and the third cycle of growth is pure acceleration. It's moving beyond traditional marketing. It's moving beyond traditional sales. It's moving into a space where you're establishing, through collaborative relationships, channel and distribution agreements, far and wide, serving clients similar to those that you're pursuing. It's also the early stages of looking at some acquisitions. And once you have reached that stage, you typically now, 12, 27, 28 years in, 26, 27 odd years in, the last few years have to be focused on ensuring a proper exit. It's at this stage here that you worry about growing your EBITDA, your profitability. In these former stages, you're using the profits to invest in the business. In the later stages, you want to show a rapid increase in profits and a significant increase in profits in order to secure a very clean exit. What's interesting, however, is that innovation within this cycle of growth reverts to you going back to your original purpose. Who do you serve? What problem do you solve for them? What experience do they want in having that problem solved? Gives you your positioning. As you move from level to level, your customers should lead your innovation. I can assure you, the business you built in the first instance 12 years ago was relevant then, but the life of your customer has changed significantly. Their problem sets have changed. Their access to technology, their way of doing things has changed. Successful innovation, getting from level to level to level, must be customer-led. So getting this right means removing impediments. Who wants to sail into an iceberg? And it happens daily. There are 5 impediments which we'll be talking to now. The first is finding, winning, and retaining customers. Increasingly, the single biggest challenge faced by businesses globally. The second is eliminating chaos and increasing certainty. There's nothing worse than securing new opportunities only to find that there's chaos in your ability to fulfill them. The third, and I find this fascinating, with more and more people getting access to education and more people becoming increasingly capable, finding the right people to do the right thing at the right time all the time remains a massive challenge. Fourth, this goes right down to you, spending your time leading rather than doing. For if you're doing, who is leading? And then finally, ensuring that what you're doing today will accumulate and build the momentum of a successful exit at the end. 94.6% of businesses started in the United States of America fail to sell. 97.2% of businesses started in Australia fail to sell. The stats are against us. So what makes your business, your particular business, special in the eyes of your customers? What are the options that we have available to us? Is a price? Does that make it special? Is a product and service features? Relationships? Relationships? Product and service features? Your service? Price? Quality? Quality seems to be creeping. Oh, there's some other. I always find that other interesting. Take a step back for a minute. Think to the question, what makes your business special in the eyes of your customer? This ship was a ship built by Dutch merchants. It was given to Sweden. And in 1658, it took the first settlers from Sweden to the United States of America. 1658. They were sailing terrible seas across the Atlantic. And the captain of this ship decided to use the lion as the masthead. He believed that that would set his ship apart. He believed that the lion, a symbol of bravery and boldness, fearlessness to cross the Atlantic Ocean into a new land, would attract the passengers to make sure that every journey was full, locked and loaded. What makes your business special in the eyes of your customer? So if we look at it, by far the majority are saying, well, we have an equal sense of view. Products and features and service. I want to contend differently with you. Brand positioning is all about responding to a competitive, extremely noisy environment. We were taught in the early stages that products matter. A good product will earn a good business. That's already 18th century thinking. Thereafter, we were told that price matters. And Henry Ford yielded the Ford with an argument saying you can have any Model T Ford you want for so long as it is black. The assembly line was produced to drop the price of products. Philip Kotler then emerged in the early 60s And he said, no, the world is full of product. It's full of services. What sets it apart is the way you market your product and services and make your customers aware of it. And he introduced the whole concept of segmenting customers, understanding that we are not all the same. That still gets promoted actively in business today. It gets promoted and transmuted right across business schools globally. And yet, from an Auric point of view, we have not seen that work in the world of SMEs. Businesses up to $100 million, 500 million rands, 150 million Australian dollars. What we have seen consistently work are those businesses that believe what makes them special is not their product, is not their service, but their expertise in understanding who it is they serve, and more specifically, what problem they solve for them, and more specifically, the experience their customers wish to have in learning about them, in understanding how to engage with them, in being engaged by them, and in having their problems effectively solved. If you think about what a brand is, it's a feeling I have for a company, and that feeling is created by the experience. The problem is solved by the product or the service itself. Distinguishing your business in terms of who you serve in relation to their problem and the experience they want is essential in creating a customer-centered proposition. I'll share a story with you. A client in the US, a group of attorneys, lawyers, were an all-purpose practice. They provided contracts for anyone, anywhere, anyhow, anytime. The partners were going out of their minds because they were constantly looking to secure new revenues and new relationships. We're relationship-driven. It's a relationship-driven business, they said to me. Over time, we managed to migrate their business from being an all-purpose legal firm to a firm that focused only on divorce law. They identified over time that they served two segments only, the 7-year itch and the midlife crisis. They got access to marriage registers, and they knew when to start marketing social media and communications to the 7-year itch and to the midlife crisis married couples. And through that, they created a resonance with those couples that found themselves unhappy in marriage. It led to an extensive amount of lead generation for them because the content that they wrote, the content that they used to communicate, the means that they used to publish their content, found access to their audience identified and connected and felt heard and understood, and their audience knocked on the door. That ability to cut through the noise by creating messaging that directly relates to the problem and the experience within which you want the problem solved as a customer is the point of distinction that saw this business grow on a compound annual basis at almost 40% per year over the 3-year period that we worked with them. Let's move on to the second challenge, eliminating chaos and increasing certainty. Wouldn't it be great when you hit those big deals, just knowing that your business has the ability to deliver on it? We refer to this as a system of delivery. And really, a system of delivery focuses on all your primary commercial functions. Marketing has one objective: generate leads. Sales, convert the leads. Operations, fulfill the leads. If we can get that cycle driven through systems, which are activities in a sequence that can be measured, importantly can be taught, can be supported with a job description and well remunerated. And we tie those activities to the experience that our customers have explained to us they wish to have in terms of how we market to them, in terms of how we engage them in the sales process, in terms of how we fulfill our obligation and promise. In effect, what we are doing is we are using systems to articulate our positioning and drive the momentum in the business. It's no different to the function of the engine room. If each gear is a commercial system, marketing, sales, ops, admin, procurement, and those gears are well designed, fit for purpose to match our positioning, and then further, because they are built as systems, can integrate to streamline the process of the business. We can craft a built for fit purpose engine to meet the requirements of our customers and clients based on our promise through our positioning. It's this that is fundamental to the success of early stage organic growth. I have a question for you. There you are. Well, this is Charlie Chaplin, but we've all been there. We all feel like it. Just as we start moving forward, we suddenly get yanked back into the engine room. If you think to your business, which cog in your mind needs the most attention? We all have them. And these cogs change from time to time. They change from time to time. In the early stages, it might be sales. In the later stages, it might be operations. It could be procurement. But the cogs definitely change. Increasingly, one of the toughest cogs is that of marketing. We have fewer and fewer and fewer options to publish our messaging, to reach our clients and reach our customers. And increasingly, marketing is becoming a real challenge that most of us face. So we are definitely sitting at over 50% marketing to generate leads, followed by sales. Yep, we're all chasing the revenues. So now, if we think about where we've gotten, we've positioned our business, we have distinction in the lived experience of our clients, as opposed to the product and service offering and its features. So we have moved ourselves from being a product benefit or service benefit business to a problem-solving business. We've understood who we serve. We have a good sense of how their problems come about that we are built to solve for them. We have created a set of systems to consistently and reliably reach that. The next trick is to get that system working in sync. 14 years ago, we were met by a baker, 54 years of age. He had started his business 30 years previous, and he was selling services or fresh baked goods that he manufactured through a retail format to customers and consumers, and through a business-to-business distribution format into the hotel groups and supermarkets. He'd hit about a $5 million a year revenue. He was fed up. He hated the business. He said his life was a slog. He said he kept on being pulled into the engine room of the ship. He had loved the baking sector. His father was in the baking sector. His grandfather was, and his great-great-grandfather was one of the original bakers out of a French bakery somewhere in Paris that had a very specific recipe for croissants. 4 generations built on the back of beautiful croissants. 30 years of effort, sweat, and toil to hit under $5 million of revenue with the view wanting to sell. After engaging with this baker, we simplified the business. We eliminated the B2C. We got the positioning right within the hotel group sector and the supermarket sector. 2 segments of clients only. We ensured that the experiences were deeply understood, articulated a system of delivery, empowered a team to operate them. And in December last year, this business closed at, well, that number's slightly wrong, just over $50 million a year. Profitability had increased from inception to that $50 million by almost 10%. The valuation impact of that is enormous. This business owner is no different to most of us. He's experienced one sector. He knows his oats or he knows his croissants. Well liked, well understood, internationally well versed, deeply connected, hardworking, smart. He thought croissants would build him the $50 million business. It wasn't the croissants. It was the articulated system of delivery that created a positioning that his clients dearly, dearly appreciated. So we've got positioning in play, we've got team in play, and now we're moving to, we've got positioning in play, we've got the systems in play, now we're moving to a team, a purposeful team. How do you get the right people to do the right thing at the right time all the time? How do you get it right? And the question I always put to a business owner is, who is your dream employee? Right now, if you could have one employee in a certain element or aspect of your business that was the silver bullet, the white knight, this individual that was just remarkable beyond any other individual that you've ever come across. This individual who would come in and solve a series of problems for you in one aspect of the business. Where would it be? Is it about finding new leads, the process of business development? Is it about sales? Or is it about holding a steady, reliable, consistent platform of delivery so that you can sell unabated of fear or apprehension that what you're offering and promising might or might not be delivered? That certainty is enormously valuable. So we're sitting exactly 30, 36, 36, 38, 34 in sales, followed on by marketing. Finance, mostly we've got sorted. HR, we've got sorted. Admin, we've got sorted, and that's a relief. It remains one of the single biggest challenges. So here's the thing. If you've understood what your positioning is, and that defines your entire purpose as a business, and that positioning is centered on well-defined groups of clients and their experience that they wish to have in order to continuously support you, and the experience that they describe is similar to how others like them would enjoy an experience to be delivered to them in order to now begin supporting you. If we've understood that with clarity, and we've understood how to translate that into a set of business activities, in other words, a system of delivery in marketing, in sales, in ops, in admin, in procurement, it puts us for the very first time in a position where we can find the right people to do the right thing at the right time. Think about it. If a system is made up of activities in a sequence that can be measured, the process of marketing, I run 3 campaigns a month to 3 different segments of clients that I wish to reach, premised on the experience they've told me they want in learning about how we can solve a problem for them. I can break that up into a set of activities, which when put into a sequence, allows me to capacitate and train an individual to operate that system. The fact that it's measurable and has a measured outcome allows me to performance manage that individual. Those 2 elements alone put me in a position to dramatically improve my recruiting. Because I don't know how you folks feel, but every time I look at a CV and you look at the spectacular character of the incumbent, and you look at all the bullet-pointed skills and capabilities the individual has, one would think they could build the base station on Mars. And yet, understanding who is the real person behind that and whether they are suited to your purpose or function as an employee or employer is profoundly difficult. If you have a system built on a set of activities in a sequence, when you employ, you look for character. Because testing the aptitude of the individual to suit the system is far easier than simply saying, I'm looking for someone to market our business. there's a dramatic improvement in that light. I've had arguments put to me, yeah, but you know, systems like that. So what are you saying? We must employ people to operate systems. Yes, I am. The systems that articulate the positioning. But Pavlo, they're people with feelings. How would you like to be a system operator? My response is always the same. If you've matched the individual's aptitude, interests, skills, capability to the activities that make up the system, it means that the probability that that individual will perform well, succeed in their function and role is highly, highly probable. And it's a funny thing, but I've noticed that when people do well at something, it builds confidence. And when the confidence builds, they invest more time in doing what they're doing better. And when they do better what they did before, it creates meaning and it creates value. I find that when people are well matched to an activity or work, generally they blossom and flourish. We have our positioning right. We've created a system of delivery. We have a purposeful team that's given life to the systems, and we have now organic growth in place. Your hand in the day-to-day business is going to be dramatically relieved. We estimate around 70% of your time would now be made free. You have a number of choices. Do you learn to play golf? Do you learn a new language? Do you learn to bake sourdough bread? Or do you now mute your business and transmute your business from the first cycle into the second cycle? But this needs to be preceded by a question. As a business owner, as someone working in the business, where do you spend most of your time? Going back to the ship, we can either be on the bridge, which controls the direction of the business. It has a navigation room. It lets you know in the wild open seas whether you're on track to attain your destination, given the resources you have available. Or we can find ourselves in the engine room, where we're hauling coal to simply keep the momentum going. Last year, the number of business owners that were pulled into the engine room was profound. Last year, every business was attacked. And at a point of attack, you need to lead a battle from the front lines. Where are you today? And where do you wish to be tomorrow? Because where you spend your time is vital in the probable success that you're going to enjoy. So we're sitting with about 60-40 split, engine room and bridge. By far, most of us are in the engine room. It's a place we need to get out of, because being on the bridge lets you do three things well. The first thing, and this is the definition of next level growth, a third of your time will be spent building culture in amongst your team. It's about mentoring, it's about guiding, it's about supporting, it's about learning. It's about hearing from your team members how, through what you do, you can make their lives easier. How can you improve their lot by helping them perform better? Systems will take you so far, but if you have the right culture in a business, where systems fail, culture steps in. The second point of attention should be on next level growth. When building an asset of value, and in the asset of value business building system that we've developed, next level growth is where you look for new market opportunities to increase your revenue, but to subdue and maintain consistency in your operating costs. The system of delivery we spoke to earlier, should you find new opportunities that you believe can significantly increase your turnover, but at the same time will create chaos in the engine room of your business, will disrupt the well-articulated systems that you have striven to build, two things happen. Number one, it creates chaos, hauling you back down from the bridge into the engine room. And number two, it prevents a yawn from growing revenues to stabilizing costs. That growing yawn is fundamental to finding the funding for next level growth as you move to the third cycle, and it's critical in securing a clean exit. The final area is all to do with innovation. It's your role as a business leader to go back to clients and customers and ensure that you are still fit for purpose, given the changes that they themselves might be going through or have experienced. And the reason it's the role of the business leader is because you ultimately have to make the choices and decisions to adjust positioning ever so slightly, to tweak systems ever so slightly, and to ensure that your team is behind you, working with you, and capacitated to meet the new requirements that your clients and customers demand. If we as business leaders don't spend 70% of our time doing this, which will give us growth beyond organic growth rates, then who is? So now we have a niche, we've niched our business and we want to dominate to accelerate value. I want to share a story of a building firm. The building engineering space is fraught with challenges. Typically, you move from project to project to project. This individual, 46 years old, he'd been in his business for 14 years, was running project to project to project, able, capable, proficient. He understood the trade. He understood how to get things done. He was going through boom-bust cycles, landing a project here, landing the next project, landing the next project, securing deposits, using them to fund the previous projects, trying to organize his teams, constantly having to deal with flexible labor requirements. It was a nightmare. Eventually, this individual based in the UK decided to focus only on building and improving loft rooms. It was the positioning process that we had gone through with him. He understood who wanted loft rooms and started to target middle-income families. Those families that had kids and elderly parents to cater and care for. Those families who were increasingly needing additional space in their homes. Those families whose homes were their biggest assets. He created 4 different propositions, one for elderly parents in the home, one for a work from home office, one for additional space to cater for a growing family, and one to cater to the investment value that a loft would add. He reached the market effectively because the market told him how to get there. And eventually, he had 4 designs only for loft rooms in homes. He had gone and tied down all his suppliers to meet and marry the 4 designs. And he capacitated his sales team to sell one of the 4 designs in order to meet the requirements of the 4 propositions that he had defined. Can you feel the simplicity of that business alone? He was never disrupted in his supply chain. His teams knew exactly what to do, when to do, how to do it. The marketing process worked magnificently well. Very quickly, he had created a business that required him to spend only 30% of the time managing the organic growth. And with the remaining 70% of time he had available, he immediately opened up a channel to the estate agents. That business in a 2-year period doubled in size, literally doubled in size, and most magnificently yielded a far deeper profitability behind it. If it's not simple, it cannot be scaled. If it cannot be scaled, next level growth is impossible because you will always find yourself being pulled back into the engine room. I want to start ending off talking about your business today in terms of its value. And what does the value need to be tomorrow? So there are 2 strategies, there are 2 techniques to establish value. And I can talk to this with deep authority. I had the I'm never sure if it was a fortune or misfortune for being the external examiner on company valuations for a leading business school over 3 years. I had to mark 600 papers over 3 years, all different valuation techniques. So I can tell you with authority, there are 2 methods for you to get control of your valuation. Let's see in the chat if you know what they are. That's a symbol of 1, and that's a symbol of the 2nd. Available to us all. Oh, there's some nice questions coming through in the chat as well. That's called hope and pray, and that's called build for value. Let's just look at the stats again, because the stats are quite scary. More or less globally, 5.4% of businesses started sell successfully in a clean exit. By far, the majority fail. In succession, where you're hoping to succeed your exit either through family or management, 27% of those efforts yield success. And here's the thing, folks. We spend 10, 20, 30 years building our businesses. In my former life in corporate finance, these deals, the acquisition deals, the transactions of selling a business, occupied anywhere between 30 to 60 hours of that business owner. 30 to 60 hours. To give you a good sense, there are 160 working hours in a month. And a half a month to sell a business that might well have taken you 10, 20, 30, 40 years to build. When we build our businesses with the view to generate income. Seldom do we think about how we need to build our businesses differently to ensure capital growth and to ensure complete independence of us. Because if we don't build it as an asset, this buying process that I'm going to share with you now fails dramatically. If we think about who the final customer is of our businesses, surely it's the individual or company or group or organization or stock exchange looking to acquire the business from us. If you imagine, and these are average numbers, they vary slightly from sector to sector, a valuation of your business on a 2 times EBITDA number, the net profit before tax number, whatever that number is, multiplied by 2, and on average, and it varies slightly up and slightly down, depending on which sector and industry you're in, and depending on what age the business is and what size the business is, that's more or less the starting point. The process of valuation works like this. The first question a buyer asks is, what makes you special? Whatever industry you're in, whatever business you're in, I can assure you there are thousands of competitors. Let's go back to the baker. In this instance, this baker sat in an industry that was represented by 5,400 competitors. 5,400 competitors. When the buyer visits each of the competitors to find the ideal asset to acquire and asks, what makes your business special? What do you think most of those individuals said? Our croissants are the best in town. Our croissants are the best in town. As opposed to saying, we exclusively serve the hotel sector and we ensure a smooth, reliable, 365-day continental onboarding fresh baked breakfast every day, right across the nation. It has very little to do with the quality of the croissant, and it has everything to do with the problem being solved for a very well-defined group of clients. The next question that a buyer asks is, but Bill, without you there, can this happen? To the extent that you can show you have developed an articulated system of delivery through all the commercial functions that not only independently work well, but integrate and coordinate well to produce a completely streamlined mechanical experience to meet the requirements of your client or customer. It answers the question as to whether you need to be there or not. And then the buyer says, but without you there, who leads the business? To the extent that you can show you have the right people doing the right thing at the right time, and because those individuals are well selected and have a structure against which to perform and exceed in their performance, you can demonstrate the evidence of a team. The next question a buyer asks is, but beyond where you are, does the business have growth potential behind it? And for so long as you can show that after having serviced the hotel sector, you have migrated and moved on to the supermarket sector, which seeks to solve the problem of onboarding fresh baked goods every morning in order to capture the morning trade in the instance of the baker. And through doing so, there was little disruption to the system of delivery and the team. It demonstrates that you can add additional revenues through new market segments on the back of the platform of the business itself, widening the profitability. The final question the buyer asks is, without you there, what would go wrong? And to the extent that you can demonstrate the first four, the impact on the 2 multiple migrates to an additional 5 multiple. You will achieve anywhere between a 7, 8, 9 multiple on the profits of a business that you would have built in any event, had you built the business in this manner. To the extent that you cannot demonstrate it, the impact is equally negative. You lose half a multiple if you cannot distinguish yourself, a full multiple without a system of delivery. And eventually, if the business is entirely dependent on you, I can give you the exit price of that business, because in my former life, I acquired 2 businesses like this, $1 a piece. I want to end off with a thought. We've worked with over 2,700 businesses across 3 continents. We've managed to achieve a consistent 28.9% average compound annual growth rate. That in effect doubles a business every 31, 32 months. We've seen two things in business owners that have yielded their success. The first is their relationship and view on time. We have a choice. We can either spend our time in the doing, or we can invest our time in how we structure activities. From an Auric point of view, we fundamentally believe that every business owner should be building a system of growth rather than doing the growth. A system with well-done positioning, a system of delivery, a purposeful team. That system of growth is the real job of the business owner, and it's how you invest your time rather than spend time. The second element is the system. It's understanding that there are 3 to 4 cycles in the lifetime of a business's opportunity to grow. If you get the base system right and establish that strong foundation with the view to then dominate in the sector and build brand, with the view thereafter to accelerate your revenues, and finally, in the final stage, deepen your profitability. There's not one person in the room with us that doesn't have an ability to take a business from its get-go to a $50 million, 500 million rand, 75 million Singaporean or Australian dollar business. Not one of us here has the ability to not achieve that. I want to end off with just 2 thought starters. Your job is to build a system that makes the business happen, not you making the business happen. And the second thing that we foresee in the next 3 years ahead is the extent of mergers and acquisitions activity between corporate entities and mid-tier businesses is going to escalate. If you think about it, all economies are under pressure at the moment. All economies will bear the cost of COVID. They will bear the cost of COVID. It's going to translate into economic vibrancy right through the world. Large listed entities have no choice but to grow. Large listed entities grow by doing two things. They outsource more and more services that were internally held, creating vibrancy and growth opportunities for small, medium enterprises. And then further down the line, they begin to acquire the innovation and growth rates in mid-tier SMEs. The next 3 to 5 years, we will witness a level of M&A activity that will have the hope and potential of creating many, many, many multi-millionaire former SME owners. We believe the time is now. Very briefly, Auric was started by starting, building, and selling 12 businesses. We had 2 listings. We had 3 management buyouts through succession, 5 trade sales, and 2 glorious failures. What was most valuable, however, is that the last number of businesses, the last handful of businesses, took half the time and a third of the investment to build to the same value as the first handful. And the reason was because in the first instance, through practice, from business 1 to business 12, we identified a method of building a business, a system of building a business. The second reason was we understood that there were 3 to 4 stages that you needed to migrate your direction and leadership as a business owner to deepen value. Today, we work across the UK, the EU, and South Africa. From September, we're going to be active in the US and hopefully in Australia too. And with that, I'd like to look through the chats and answer a few questions. There are quite a few. Over here. Where will growth come from a market slowdown? Well, it's going to come from what I mentioned earlier. I think larger businesses are less adept and less able to respond to the changes in the marketplace. We have the opportunity to do so far more effectively, far more proficiently, far more adaptively. And for that reason, we're already seeing large businesses outsource internal services. Those service opportunities become our opportunities to deliver. So through that, we will get growth. And then in the second instance, last year, we deployed a strategy right across all Auric clients called Reset, Rebuild, Reignite. It was a process of saying, the world has changed. And in that change, your customers' realities have changed. And in that change of status quo, you need to understand how to remain relevant given the changes experienced by your clients and customers. We call that the reset phase. The rebuild phase was around then making the adjustments to the system of delivery to ensure that the business would serve those required changes to your clients and customers. It included capacitating your team. The third phase, Reignite, which is during 2021, is centered on the following. In the first case, those businesses will be working in a far less competitive environment. 15 to 30% of your former competitors would have fallen away. Of those that remain, many did not make the adjustments aggressively enough and quick enough to be on the front foot of the economy in 2021. The opportunity will come in growth for you to eat their lunch. And then the third area is the shedding of opportunity by very large businesses that simply cannot respond to the growth rates demanded of them by investors and asset managers. So we see it occurring over there. From John Paul, how will the abnormal trading conditions impact on these valuations? John, I think that they will increase the valuations. It is profoundly difficult to find a good asset to acquire. If a business has been built to serve a well-defined segment, and in that, solve a problem for it through an experience. And that entire process is delivered by a business built as an asset. In effect, you're buying an asset that will grow for you. What we have consistently found in amongst large business buyers is 84%. Here's an interesting stat. It was a Harvard Business Review stat. 84% of all technology acquisitions made fail to yield value. And the reason they fail to yield value is because those acquisitions were made by large entities that operated and functioned as political creatures in the hope that they were acquiring new edge innovation. Over time, there was conflict between the seller, the founder of the business, and the entity that acquired the seller. The seller would leave, and through that, the vision of the business itself would leave. The leadership that held the team there would leave. And the third element was when that business was acquired, it was acquired sans systems, which meant that systems from a corporate entity were embedded into the underlying business itself, and that completely killed the ability of the business to continue with its current growth trajectories. So in the instance that you have a business built in this manner, and you can support the arguments I shared with you 3 slides back, I believe that you will achieve very, very interesting valuations. To EBITDA for a business seems low. Gavin, what are the highest return sectors and what are their multiples, specifically focusing on manufacturing? I go back to it. It's a 2 EBITDA as an average for the simple fact that it's same but different. There are so many contenders out there who are doing so few things differently from the next. In fact, increasingly, I think businesses that respond to a competitive environment with price or the promise of a service or the idea that their product or service has better quality, all of those features fall away. The way that you yield far more aggressive EBITDA valuations is you need to be able to distinguish who you serve in terms of a segment, quantify the value of that segment, and demonstrate increasing penetration into that segment. It really has far less to do with the product suite that you might have, or the service suite that you might have, or the promise of quality, or the promise of personal service, or the promise of price. To the extent that markets are continuously fragmenting, all you need to do is find a small sliver and dominate in that sliver. Because if you think about how businesses progress from the edges rather than from the center. New market opportunities are created from the edges rather than from the mass. And as SMEs, which we all are in terms of government definitions, we have the ability to find that sliver, mostly discarded by very large contenders, overcompeted by smaller contenders who are using a product or price or feature advantage. And if we tap into them on an emotional and then mental basis through the experience we create and dominate that segment, you will stand out from the crowd and yield the high valuations. Expert knowledge and intangibles, Jonathan. You know, you can be an expert at something, but what's it worth? I'll tell you what it's worth. The smartest people in the world, the most capable people in the world, the most expert people in the world are fantastic at building income-only businesses. They struggle to build a business into an asset. I have an engineering background. When you study engineering, you believe you can fix everything, I promise you, and anything. Engineering is about learning to spot problems and figure out the fix for the problem. And one of the biggest challenges we have when working with individuals like that, whether it be in the creative industries, so you see it extensively in the advertising sector, where someone has a creative bent, a creative talent, in the engineering sector, where someone has deep, deep skill. We see it in some elements of the legal sector, where you've developed a profound knowledge of a piece of statute. So we see it right across the sectors. The business gets built for all of us behind our strengths, our capabilities. It gives us a sense of being in control. If we're in the cup making business and we have a good sense of how to manufacture cups, the impulse in order to grow the business for that individual is to make a better cup or to make a cheaper cup. It focuses and centers on the features of the service or the product. And yet I can show you consistently that what gives growth in the business is the ability to spot a problem within a well-defined segment of clients, to become an expert rather than a cup making, understanding how the problem comes about, understanding how to help the client identify the problem and see the problem, and understanding how to build a system that delivers a great experience in having that problem resolved. It remains, without a doubt, for all of us as business owners, our single biggest challenge. In effect, if you think about it, you only ever spend money in having a problem solved. Yeah, commoditization is happening extensively, but it's on the fringes of that commoditization that markets break away. And it's happened like that for years. What social media done has has increased the level of fragmentation. So it's about specializing in a small fragment of a market that you used to serve, that you're finding yourself being commoditized in, and seeing how that market is looking for a point of difference. If you look at any product life cycle, you always start with the innovators and then move on to the early adopters, the early laggards, the late laggards, and then the mature bunch at the end, who are obviously too late. I think I've covered how long is it realistic to design a system of delivery for one particular area of the business. Okay, very interesting question, Dominique. There's DIY, do it yourself. And here's the thing. If you think about what your core skill is, are you going to invest time learning a new skill when time is the only thing you have that you can never get back? I mean, surely you want to get through this process as fast as possible. So I've seen businesses that are 15, 20 years in and have still not gotten through the first phase of developing that underlying first system. We're not taught how to build systems. We're not taught how to build systems. When you go to business school, you're taught about the function of marketing and the function of sales and the function of human resources and the function of operations. But we're not actually shown how to artisanally build a system of delivery. From an org perspective, we look at establishing 4 base systems across every business we work with. Once we have gotten positioning right, once we have gotten the goals right, we immediately migrate onto a lead generation system that matches the positioning of the business. And how long does it take? Within our fold, it takes in and around 3 months. To the extent that you have your team on board, I saw an earlier question about how do you get your team motivated and skilled to deliver on that for you. To the extent that you get your team involved in building a lead generation system, the mere fact that they're involved, the mere fact that they're bringing their knowledge independently of your knowledge to the fore to create the sets of activities that could be put into a sequence to land a marketing message and generate interest means immediately that they themselves are co-creators alongside with you in the lead generation system, means immediately, because they're co-creators, they take ownership of the system, and it means immediately that they're being trained on the job of building the system to operate the system at the same time. Because we're a business that relies on 70% of our revenues and growth through the performance of clients that we work with. If they don't grow, we don't grow. We try and shorten these cycles as quickly as possible. The 30-year cycle that I spoke about earlier, the 4 stages of growth through those cycles, we try and bring into the shortest possible time frame because we rely on that based on the promise we make to the clients we work with. So to the extent that you have your team involved, to the extent that you have a method to build a system across marketing, across sales, across operations, across finance, across procurement, across administration, across human resources, you can get that entire system set built within a 3-year period of time and massively reduce the 30-year period to a 15, 20-year period. Streamlining the business, Francois. Well, if you think about it, you've understood positioning, and through that, every single cog that was built was there to optimize the function of marketing, then sales, then ops, then admin. And if those cogs are all meeting each other in a smooth manner, you've created the streamlining capability that you'll be looking for. We are sitting over time, folks, and I'm very aware of it. What we will do is we will attempt to get to the questions that we weren't able to answer. We'll get to you directly with them. I really hope to see some of you again. I know my team will be reaching out to you, but most importantly, I hope you got real value from today. I am sorry that I stretched over time. It was largely through the questions. So for that reason, I hope it was valuable for you and to you. The last point I want to make is don't be sensible. Don't be sensible. James, I can see you smiling. And what I mean by that is this. Many business owners we are speaking to today say the uncertainty out there in the market is making me nervous. It's not clear what I should be doing. It's not clear what direction we should be taking. So using the sailing analogy, what we're going to do is go back into the safety of our harbor because it's storming out there. We're going to batten down the hatches and send our crew home in order to preserve what we have. It would be a fatal error. It's in times of uncertainty that the future giants are built. If you look back as history, all the way back as far as you can go, to the extent that businesses were being emerged and spoken about. World War I, World War II, times of massive crisis, built some of the giants that we work with today. From Mercedes-Benz to General Electric to JP Morgan. Look back in history, they were all built in a time of crisis. There are 3 strategies for uncertainty. The first strategy, if you've not done so, is to immediately focus on resetting and rebuilding your business to be relevant to the changed circumstances we have in front of us today. Because these circumstances are here to stay. COVID will give us a hangover for the next 3 to 5 years. On top of it, it's going to create tremendous pressure on economies globally. Straight behind COVID, specifically in the United Kingdom, you've got Brexit. The 2012-page agreement has over 504 agreements to agree on certain trade issues. And straight after Brexit, you've got climate change. One of the first executive orders signed by Biden on day 1 of his administration was back to the Paris Climate Accord. Legislation which is going to reshape the way all businesses operate is following soon behind. In South Africa, you have persistent issues with power generation. Going into harbor and waiting for the storm to pass means every day that goes by, you're becoming less and less relevant. Sailing into the storm and ensuring that the hull of your boat is built to withstand the storm, and ensuring that you capacitate your crew to sail successfully in a storm, so you can get to the other side of it before the rest of the market is the only strategy you should be focused on. What it does mean is that those tactics must be made in very, very small steps, because we have to learn to lead with uncertainty. And the best way to do so is to do so iteratively. Hence the system that I spoke about and the cycles to double down on the learning from period to period to period. I hope that answers the question. Thank you all very much for joining us. Thank you for giving up the time. We will get back to you. We will send out the recording. I do encourage you to get hold of Sweat Scale Cell on the system of building an asset of value, Reset, Rebuild, Reignite on a process, a system of leading in a crisis so that you thrive. I look forward to seeing you all again. Once again, thank you so much for joining us.